Welcome to Unit 12, where we will be studying new types of worksheets with adjustments and financial statements that follow. The objectives for Unit 12 are that students will have the skills at the end of the unit to prepare adjustments on a worksheet for prepaid expenses and depreciation of fixed assets. They will be able to complete an 8-column worksheet. They will be able to complete a 10-column worksheet. And students will be able to prepare financial statements based on the information on a worksheet. Let's review worksheets as they look at the moment. Right now, we only understand how to work with 6-column worksheets. Please notice up here that we have trial balance, we have the income statement, and we have the balance sheet columns. Each one of those columns is split into a debit column and a credit column. The procedure has been to list all of our assets first, all the accounts that are included as assets, all our liabilities, then our owner's equity, our revenue accounts, and our expense accounts. We transfer these accounts to the trial balance. So assets come to the trial balance as debits. Liabilities and owner's equity come to the trial balance as credits. Revenue comes on the trial balance as a credit, and expenses as debits. Based on the information in the trial balance, we transfer these amounts to the appropriate financial statement. Assets, liabilities, and owner's equity all get transferred to the appropriate column in the balance sheet section. So assets go on the debit side, liabilities and owner's equity go on the credit side. Revenue and expenses get transferred together to the appropriate columns on the income statement. So revenue goes to the credit side and expenses the debit side. Now we're going to take a look at an 8-column worksheet. The 8-column worksheet is prepared the same way as a 6-column worksheet, except there are 2 new columns that represent the adjustments. The sections now are: trial balance has 2 columns. It's immediately followed by 2 columns where the adjustments will go. The income statement follows the adjustments, and the balance sheet follows the income statement. So we've inserted the adjustment 2 columns between the trial balance and the income statement. Here's a sample. Please notice we have the trial balance, we have the income statement, and we have the balance sheet like we did in the 6-column worksheet. But now between the trial balance and the income statement, we have a debit column for adjustments and we have a credit column for adjustments. On the blank 8-column worksheet that I have given you, copy the information from Figure 6.5 on page 221. How do we prepare adjustments? Let's take a look at supplies. Supplies is an asset account and it has a $1,000 balance. Inventory taken at the end of the month shows that there is only $900 in supplies remaining. Add the following 2 entries to the 8-column worksheet. We have a supplies expense of $100. The supplies asset account has a credit of $100. To adjust the supplies account for January is the description. So when we add that to our worksheet, this is what it should look like. Notice, supplies have been adjusted by $100. The original amount right here is 1,000, and we've had an adjustment based on that journal entry of $100 credit. Now that is the supplies account. We have to create a new account called supplies expense because it wasn't here before. So we write that at the bottom in the first available spot, and we mark that under the debit column of the adjustments, $100. The first entry is supplies, $100. The second entry is supplies expense, $100. Be sure to include the appropriate account number that has been set up for supplies expense. Let's take a look at prepaid insurance. In January, a $720 one-year insurance policy was purchased. At the end of the month, 1 month of insurance has been consumed. The insurance expense is the full amount of 1 year, $720, divided by 12, which represents the cost for 1 month, which is $60. Add the following 2 entries to the worksheet. So our journal entry for this adjustment is an insurance expense of $60. Our prepaid insurance account is credited $60, and our description is to record the insurance expense for January. In order to enter this onto our worksheet, we have to take a look at the expense, insurance expense down here, and we've added that as a new account underneath supplies expense, and the amount is $60 in the debit column. The prepaid insurance has a value of $720, and because of this we have to reduce it by $60, so that is a $60 credit entry. Notice that in this adjustment we have a prepaid insurance account that originally has a value of $720, and under the adjustments we have to add this $60 amount. The second entry is at the bottom under insurance expense, which is a new account that we've created. We've given it its appropriate number, and we have to debit that account $60. Here's another example for prepaid rent. In January, rent of $5,100 was paid for January, February, and March. At the end of the month, 1 month of rent has been consumed. The rent expense is $5,100 divided by 3, which is $1,700. Add the following 2 entries to the worksheet. So here is the journal entry. The first entry is the debit entry of rent expense, $1,700. The second entry is the credit entry for prepaid rent. That is a credit entry of $1,700. On our worksheet, we have our third entry. If you look at the bottom, we have the rent expense, we have the account number, and we have the amount. This is the debit entry of $1,700. Up in the prepaid rent asset section, which originally had a value of $5,100, we have a credit entry now of $1,700. The first entry is the $1,700 that was in the prepaid rent, and we have to credit that. And the rent expense is the other entry, which is a debit entry of $1,700. Let's look at equipment. Equipment is depreciated at the rate of 20% per year. The declining balance method must be used. Cost of the equipment is $12,000. The accumulated depreciation to this point is $2,400. Therefore, the remaining depreciation available is $12,000 minus $2,400, which is $9,600. This is the amount that we use in order to make our current month's calculation. 20% of $9,600 is $1,920. For the current year, the total depreciation is $1,920. In January, the depreciation for the equipment is this yearly amount, $1,920, divided by 12, which represents the 12 months, which is $160. Add the following two entries to the worksheet. These journal entries are: depreciation expense for equipment is $160. This is the debit entry. The accumulated depreciation for equipment will be credited $160. The description is to record the equipment depreciation for January. On the worksheet, we have to add these two adjustments. A new account is created at the bottom called depreciation expense with its appropriate number. The amount that we calculated was $160, and that goes in the debit column of the adjustments. The accumulated depreciation for equipment is the contra account for equipment, and it has a credit balance when we started of $2,400 for this month. For January, we have to add an additional $160 to this account, and it's in the credit section, the credit column. To look carefully and closer at this, the two entries are accumulated depreciation for equipment, $160 on the credit column. The depreciation expense, $160 in the debit column. Now that we've done the adjustments, we carry on with the worksheet just as we did when we had a 6-column worksheet. Once you have finished that example, your assignment for today is to complete questions 13, 14, and 15. And some textbooks, because they're different editions, start with question 14, but they are the same. So just check to make sure that your question 13 or someone else's question 14 are the same. Also complete exercise 7 on page 233.